What's going on, everyone? My name is Johnny and welcome to Stock Rank, and today we're going to go over the 10 steps to finding the best stock. You want to look for companies that are into what is going to be expanding moving forward. What are the products and what are the ideas that are going to shape the next decade to come. Step number 2 is to look at the products that the company offers. In some ways that you can do this is by looking at the articles that people write about them. You can look at the reviews. That's a personal favorite of mine because you can really look into what people think about the products. And so the other thing to be looking for in products in particular is what actually separates them from other products. If it's not better than another product, then it's difficult to actually trust that that product is actually going to expand the business. Step number 3 is this. What is the company's revenue growth? And there's 2 ways of looking at this, and I actually want us to focus on both of these. The first way is, what is the calculated revenue growth? And what I mean by that is, what is the revenue that has already been processed through within the last few years? I try to see, does the company produce 75% year over year revenue growth? And if so, then I'll continue to move on to the next step. But if not, then I might do a little bit more research, but I'm already starting to be a little bit cautious. And so the second part of it is the expected revenue growth. We cannot always trust the projections that companies give us, but it allows us to get an idea as to what their goals are moving forward. I personally want to see the company produce at least 50% year over year for probably the next 3 years or so. Ways that you can view both of these numbers is actually through this thing called their investor presentation. An investor presentation is basically a summary or an overview as to what the company offers, the certain products that they have, but also the financials when it comes to their company. And the next step is talking about the industry itself and what their growth is. A term that you can look for is called the CAGR, or the compound annual growth rate. And this actually demonstrates what the industry as a whole is growing at. And so when it comes to industries as a whole, I want to be able to look for companies that have at least 8%. Step number 5 is, does the company have minimal to low debt? If a company has no debt, that actually decreases the risk of the company. Step number 6, what is the projected revenue over the next 5 years? Personally, I suggest making your own numbers if you feel comfortable enough in doing that. I tend to be more conservative on my numbers anyway, so if you want to trust the investor presentations, that is up to you. But for me personally, I tend to have more confidence when I write the numbers myself. Step number 7 is this. Is the management team experienced? It is so important for you to have confidence in who you are trusting with your money. Personally, I spend a lot of time looking at, what do they post on Twitter? What is their LinkedIn like? What are their interviews like? I think it's really important to spend quality time looking at the management team so that you feel confident in putting money towards their company. It is so important to be able to ask the question, who is truly vital in this organization? If that person were to leave, would it negatively impact the organization? And the second thing is this, is the team buying their own stock? If you can see that an owner or the CFO or the COO is buying their own company, especially at higher prices, it allows you to trust their numbers as well. And so the last question when it comes to the management team is this, how are they growing and innovating? Who are they acquiring? What are their big acquisitions? How are they coming up with the money to get those acquisitions? Step number 8 is this. Check news articles over the last couple months. Now, this is really important because you want to be able to see if there are any lawsuits that are going on, if there's any new partnerships that could be coming up. Another thing to be looking for is, are there any recalls? Knowing those things when you're looking through your news articles actually will help you down the road so that you recognize the risks. Step number 9 is this. Listen to the conference calls. It's really important to listen to these conference calls because they can end up answering questions that you may not have thought of yet. When it comes to listening to the conference calls, one of the big things that you need to listen to is whether or not the company is meeting or beating expectations. Also, were there any concerns that you heard from the answers that they were giving to to some of the questions that other investors had. Step 10 is this: read through the 10Ks and the 10Qs. You're able to see what are the risk factors, what are some of the goals that the company has moving forward, and also what is their backlog. If there are any concerns within the 10K or the 10Q that you see, that's the end all be all. So it's really important for you to read through the 10K, make sure that you see the risks, and be able to support your reasoning as to why this stock is worth putting your money into. So I hope you enjoy this video and hope to see you on the next one.